Richard Harris is with us. He's Chief Executive Officer at Port Shelter Investment Management. Richard, good to have you with us here. Thank you very much for your time. It's in a way, I don't want to use the word stagflation, but it's a stagflationary kind of environment, isn't it? But is it? Because I'm using that word because yields in the US are at 5%. Oil prices are very high, and all of this while for the last 1.5 years, people have been expecting a recession. At some point, we'll get a growth slowdown. It'll come, but it's all kind of very muddled and confusing. It makes sense for it. I mean, what are your top thoughts when you look at prices out there across asset classes?
Well, I think you cover a lot of ground there. One of the interesting factors, though, is that the US actually is in a Goldilocks scenario. You know, we have inflation, at 3 or 4%. We've got growth at 2-3%. We've got interest rates, 5%, but that's probably where they should be. You know, I think if you're looking at that as a snapshot, you'd say, well, I'll take that any day. Sorry about that. As a result, you know, I think that this bull market is likely to continue for a while. Yes, there are lots of indications, as you say, that that we could see recession further down the line. But, you know, Powell's not talking about reducing interest rates yet, and economies still seem to be going. So we're in a situation, I think, where this bull market is dying hard.
Okay. So if this bull market is all set to continue, if that's your view, what about a market like India? How are you positioned here?
Well, I think at the moment it really depends how the global economy is going. I mean, at the moment, yes, there are indications that things are slowing down, but, you know, look at US earnings. They don't look too bad at all. Everybody's coming out with dire views in the future. And I have no doubt that eventually higher interest rates will kick in. I've no doubt that growth will slow down. And perhaps we might see some element of stagflation. But I think if growth does slow down, then we'll see inflation coming down, which is what it's intended to do. So it's a bit tricky to sort of say, yes, we want interest rates high because we want to calm down the economy, and then at the same time be worried about recession because we've got high interest rates. So I think we're in a situation at the moment. It's a bit of a phony war. The markets do seem to want to continue to keep moving. But most indicators, I think, aren't too bad at the moment, and certainly don't indicate that we're going to have a crisis particularly soon.
Hi, Richard. Morning. But then where does India feature? If you're looking at equities and you believe that the markets will climb the wall of worry, then where does India feature in that list?
Well, I don't think India is going to be any different from the rest of the world. You know, if the rest of the world is looking as if it's holding on, then India will do well. I mean, I think India tends to do well. They've done well from things like the outsourcing movement. They tend to do well when the rest of the economy is due. As the world's economy is doing well. And if we do see a big slowdown in the West, then obviously that's going to impact India. But I think at the moment, you know, we're in a situation where it's really too early to sell. It's really too early to panic. Don't forget that the markets have survived both Ukraine and Israel in the last few years. That shows the kind of robustness that's in there. And once again, I point out that I'm not saying we're in a particularly good scenario, but we are in a scenario where this bull market is dying hard. And it's going to take quite a lot to push it off the track.
I have images of James Bond in my mind.
Well, Bruce Willis.
A few times. Well, no, well put though. You know, it doesn't feel like it's kind of, you know, the market's in its final phase, or it doesn't look like it's going to crash or anything of that sort. It doesn't give you those feelings at all. So we'll see. Maybe, you know, slow burn perhaps for a while, and then this continues. Richard, it's a pleasure. Thank you very much for joining us. Shorter chat today, but we'll come back to you for more later.